Dear CEO Eddie Ghabour. And Eddie, listen, you've been cautious on this market. You've been right. Where do you think we are now, though? We've come down a lot. This is one of the worst first halves in history.
So here's our playbook that we've told clients that we're going to do for the rest of the year. We've come into this earnings season with the largest cash position of the year because we expect one more leg down in the coming weeks because of earnings revisions, as well as forward guidance coming in weak. And then we plan to put our cash to work in the coming weeks because we think we'll test the June lows and probably lower. And at that point in time, we're going to start using this cash and putting it to work because we think this market's going to bottom sometime between the fourth quarter of this year and first quarter of next year. Treasuries will be, our bonds will be the first place that we go because we think the 10-year is going to get one more jump up before it peaks and starts rolling over. And then we'll start going into the equity markets and getting things that we think at 30 to 40% below where they started the year at. So we're close, but we're just not there yet. We got to be a little bit more patient.
You mentioned bonds as a trade. What about that 60-40 portfolio that almost anybody watching this show with a financial advisor was told to get into? It's worked for 40 years. I'm seeing now where some folks are saying it won't work anymore. Is that still part of a retirement plan?
Look, I don't think 60-40 is dead. You know, it would be just like me saying stocks are dead because they had a bad year. I think what we've seen is something that we just haven't seen in a while, where the 10-year just had a huge jump and it worked inversely and killed bond portfolios. But if the 10-year peaks out, as we think it's going to, and we look at a 2% 10-year yield sometime next year because we're in a recession, bonds are going to work in that environment. So I wouldn't just abandon something because it hasn't worked for 6 months.
Let's talk about surprises, right? Because you've got a game plan. It's mapped out. It's worked tremendously this far. Let's say tomorrow, though, the CPI number comes in below consensus, right? And you start to get that you know, we're peak inflation vibe, markets rally. Would you go back to the drawing board then?
I have to see what the Fed response is going to be because, Charles, I think we are at peak inflation, and I think that the number could come in a little bit lower than what expectations are tomorrow. But unfortunately, the Fed just looks at those headline numbers, and if there's an 8 in front of that number tomorrow, which there will be in our opinion, they're probably going to stick with that 75 basis point hike. And if they continue to say they're going to do rate hikes again in September, that's where they're going to overdo it, and that's what we think they're going to do, which is why we're expecting this leg down. So I don't trust the Fed, even though I feel like we're at peak inflation already.
You're the common sense bull. You're holding a bunch of cash. I got 30 seconds. Is anything looking attractive to you? Airlines are up nice today on those low oil prices. Anything looking attractive, even as a trade?
It is not right now, and I'm sorry to say that, but I'm licking my chops for a much better opportunity. Patience is the toughest thing to have, but the most patient times we've had, we've also been the most rewarded. So I'm looking 12 months out, and I think patience over the next 8 weeks is going to pay handsomely for our clients.
Eddie, you've been spot on. Thank you so much, my friend. Folks, we will be right back.